Good morning, Money Duck here, and I'm going over oil right now because it has popped up to one of our 4 hour trend lines. So on the 4 hour chart, we basically draw a downtrend line from the highs and an uptrend line from the lows, and then we may have to move them as we go. So sometime today, I'll move my downtrend line above these highs. So what had happened was when I got up this morning, I posted that oil was up here above the downtrend line. So these trend lines on the 4 hour time frame are very strong support and resistance levels. I also use zones as trading as well. So what I want to do is do a quick look at this. I tried to get in here and get it recorded and get it posted before this downward drop. I've already pulled profit on part of my trade. So I've got these runners still on and I'm going to leave them on. So I'm going to go to the 4 hour time frame. We're going to start there. So, and again, this will be a quick video. It'll be under 20 minutes. Okay. So on the 4 hour time frame, what we did was when the pair was up in here, okay, we basically will look for a zone below it, and above it we'll draw green lines. Okay. So this or green zone. So this green zone was drawn when the pair was down in here. Okay. It came and turned, went up, and those green zones are drawn on, or the zones are drawn on wicks. I like to use in this case, to draw a green zone below it. I like to draw it from the low of a wick, low of a candle, to the close of a candle, like that red candle. Up here on the top, you're looking for a wick that is up high, and then you'll draw from the top of the wick down to the body of the candle. So this morning we were over here above that trend line. Now this yellow zone was already there. So oil had pulled up on this candle here, which is 10 a.m. Yesterday, pulled up and stopped, just above the mid zone, and then came down and pulled back up and hit it again, and came down and pulled back up and hit it again, and then it finally went through this morning. So we were looking at it possibly breaking the downtrend line. Now, we're always going to look for reasons to, should we get in this trade? Should we not get in this trade? Is it going to break and run? Is it going to turn? So that's all predictive. And last I checked, nobody had a crystal ball that actually works in the market. So the best thing we could do is look at previous support and resistance, previous swings, and use those levels as support and resistance now. Okay, use those levels to guide us. Why do price levels work? Price levels work because it is a battle between the bullish side of the market, the bearish side of the market. It's also market makers. The market makers, their orders are so large, brokers can't take them. So what they have to do is they have to break their orders up. They break the order up, and they put on smaller orders that can be taken by the broker, because for the market makers, there has to be someone on the other side of the equation taking the opposite side of the market. With us, it's a little different. They don't do that. So with the market makers, they do. So the market makers will tend to have to break their orders up in order for them to be taken. So in order for them to say buy and create a move, they have to break up the order, and it generates movement because those orders are so large. So since that is the way it works, the prices that these swings swing at and turn at are based on the market makers' prices. The bullish side of the market, the bearish side of the market, where's their prices? And also take profit. Because if I'm bullish in the market and I'm a market maker, I want it to go long. However, at one point, I'm going to have to pull profit, whether that be at the end of day. Some hedge funds, they clear out everything at the end of the day. Others don't. Others will clear everything out at the end of the week. And there's no data on this. I mean, there's nothing out there that's published that says X amount of hedge funds are trading, $200 million, and that person is closing out trades at the end of the week. Okay. But that's why we see these big swings. And I know I'm getting in a little heavy on other stuff. So back to what I did. So what I did was, since it broke the down trend line, I came back in here to look at these individual candles in here, looking for possible resistance levels. Is it going to break? Is it going to run? Because you could see right here on these few candles in here, it went sideways, pretty much sideways, a little pullback before it shot down. So I came in to look at that individual area. And what I did was, I already have my zone down here. I came in and drew a horizontal line, a couple of them. So I drew, these horizontal lines. One is off of these lows right here, candle close, candle bodies. Then I went and drew one at the candle tops, okay, the top of this green candle. Then I went and drew one at the top of the green and red candle here. Then I went and drew one at the wick up here. So those are my levels. I'm thinking, man, if it can break through all of that, okay, then we'll see a push to the upside like we had over here. Okay, because this is indecision in the market, is what they call that. So we have the bullish side, the bearish side. And if we get the bears saying, whoa, that's enough, we don't like that price, they'll push it back down. You also have the bearish side of the market. Depending on their orders and whatnot, they might be closing out. Now, it's early in the day. I wouldn't think they'd be closing out. Okay, so those were my levels I put on the 4 hour. We go down to a 60-minute. Got to do your top down. So we go down to a 60-minute, and you'll see that one line, that first yellow line, okay, that was off of these candle bodies right here, or where's it? Yeah, off those candle bodies. That's the line that it hit. Okay, so back down to 60, we see that it spiked up and it hit. Okay, so 60-minute, bam, it hit. Go down to a 15. So 4 hours, 60, 15, then we'll trade on 3 and 5. So here's what I noticed on the 15. So on the 15, obviously we had a bullish move up. I've got trade lines. I call them trade lines because I'm going to erase them at the end of the day. So my trend lines, I keep on the chart, and they're solid. My trade lines are dotted only because they're easier to spot as I look at the chart as a whole, and I could just go delete all the dotted lines at the end of the day. So here's what I noticed, though. It pushed up, kind of broke through the red trend line, came down to test it, okay, and then spiked up to hit this level and pulled back down. So these 3 candles right here is an evening star candle formation, and that is on a 15-minute time frame. So I would expect those to hold up. Okay. Now, evening stars do not have to be 3 candles. They can actually be 4 or 5 candles. Okay. Because you might get a little more where it sits sideways in here. You might get another 15 minutes or something. So you might get a doji or another, candle that looks like this. So those 3 candles, evening star, and then we had a pullback. Now, I think I looked at it about that time, somewhere in there when it hit that. I did not have time when I looked at it and all. I placed my trade. It was actually down here. You can see where my order is. Okay. So that is where I placed the trade. I put my stop above the high, placed my trade there. And then when it darted down, I went ahead and closed out profit. Now, why did I get in there? Because that's the time I woke up and looked at my phone. So this was trade off my phone, but that's just the time I got up. And I didn't want to miss it. I saw such a good setup with this pulling back, and it had actually broke back into the yellow zone at the time I got in. So those were my reasons for getting in. We had broken 2 things. We broke back down below the downtrend line, which should be a strong support and resistance level. It's on a 4 hour. It broke through this up trade line. It pulled back to actually test the previous high, which it failed. And then it started its move down. So I had a red candle that was forming. So I jumped in. Now, if I wouldn't have, if I would have caught it when it was up here, I would have gotten down to the 5 minute or 3 minute and looked to trade, and we'll drop down to a 5. But basically, my other reason for getting in the trade was because it dropped back down in the yellow zone. So there were several reasons. I didn't count them. 50% for breaking the trade line. It pulled back down under this. And that's a strong level. You can give it another 10 if you want, or you can give it 50 because it broke back through, and 10 for that one. We had a pullback on it. That's another 10%. We had a rare red bearish candle. It's another 10%. It broke back down into my yellow zone, and this yellow zone is drawn off a 4-hour wick. So there were several reasons for me to take that trade. So I jumped in. Now, if you dial it down on a 5-minute, that's where you can see a little better candle movement, where we broke, this 5-minute candle broke through that up trade line. Okay. This red one broke down, back down through the down trend line. And then this red candle pushed down. So that was our break of the up trade line. This one, it pulled back up to test that both. We wait for them to pull back, test the back of the up trend line. It just broke, but it also was testing the downtrend line, the pink one. So we had a test of both of those lines, and it pulled back up to test the high, which did not hold up, pulled down. And then this red candle actually came down and closed red. And that's what we look for. I don't like going short on green candles forming. Okay. I don't like going long on red candles forming. So I would not have went short here on this big candle here. Now, I don't, again, have a crystal ball. If you can look at that now and say, well, shoot, that was a better price. When it pulled back up here to test this high, I'd have jumped in short right there. Well, would you? It's easy to say now, yes, I would do that. However, it could have very well just kept going up. Okay. So we took the trade, or that would have been an entry to take the trade right when that candle formed. Several reasons to take it, or you're waiting for it to break back down in this yellow zone. So I waited for it to break, or I got in when it was down in the yellow zone. So if you wait for it to break back down into the yellow zone, then you're not getting in till here. If you're getting in on the price action as it happens, you get in here somewhere. If you're waiting on a candle close, you get in here. Okay. You'd been in the negative for a while and then a shoot down. So again, I jumped in and it was in this downward move here. Okay. It was either this candle or this one. I don't know. I was on a 15-minute chart. So that's when I jumped in. And then when it pushed down, it pulled back for a little bit. I was in the negative for a little, and then it popped down and I closed out part of my profit. First target, mid zone. Why mid zone? You can look over here and see a high here. Okay, you can see lows here. So that's a good support and resistance level. So that's your first target. And that's where I started to close. And then by the time I closed, I think it was about here somewhere. It was moving down. Okay. So right now we're getting that pull back, and it's testing, again, two things. We're testing the top of this zone. We're testing this high over here. We're testing the back of this trend line. So we need to see if that holds up. If you get a red candle, it might be a place to enter. So for me personally, I'd be jumping down to a 3 at this point if you're not in. I'm holding my position. My stop is out of the way. I'm going to leave my stop there. I already closed out enough profit to protect the whole trade. So I'll still be in profit on this trade overall with the amount of contracts I put on and close, because I was very confident it would push down, and it did push down. However, it's pushing back up. So we're getting these long, nasty wicks, which means there's the bullish side of the market, the bearish side of the market going back and forth. That's why we're getting such long, nasty wicks. Okay. So it would not surprise me if we get a candle close past this downtrend line. Again, I don't know if that will happen, but right now we're pushing up. So we would dial it down to a 3 minute. and see what it looks like there. So with the 3 minute, we're seeing that, okay, now instead of looking like a long nasty wick like it was here on the 5, if you go to a 3, you'll see that that 3 minute candle actually closed right on the downtrend line. And then we're pushing back off that. So again, another really strong level because it briefly during 3 minutes pushed up above, pulled back. This candle opened right here, pushed up above, pulled back. So real strong level. So can you get in short on this move? Definitely. Just be a little cautious. You probably want to go in and guys, don't shoot me if you take my advice and later down the road go, well, I should have stacked on all my lots, all my contracts. So I personally would go in lighter at this point because we're retesting this trend line and it could fully go clear back up to here. So that being said, keep your stop out of the way or go in light. Where could you do stop placement if you want to take it short? Because we just opened another candle right here. Is it closed? Yeah, this one just opened, this little one, and you'll see it's not doing a thing. So right now that one just opened. We'll see it start moving here in a little bit. So it could very well and is more likely to pop back up to that downtrend line again before it moves. So again, you have to decide where you want to get in on the trade. Stop loss. You can see, can I place it above the wicks? Sure, that would be a tight stop loss, a little more riskier stop loss. Okay. Should you place it up above this wick? Well, I can see it actually went above that wick before. So the stop loss, where you place it, is totally up to you. Some people will get in and short and put their stop loss up here. Don't ever put it right on the candle wicks. Put it up above. You'll see mine. Mine's way up here above this high. Okay. There's no set rule as to how far either. So right now we're looking for that to dial down. You can dial it down to a 1, and if you dial it down to 1, it just looks messier. So if I dial it down to 1, I would draw a line from like here to here. I want to see that broke. And it's not really a trend line. That's a retracement line. Retracement down. Where are we at? Guys, I'm not awake yet. There it is. And that's supposed to be a retracement up, isn't it? See how awake I am? All right, retracement up. We got about 1 minute left. So I would not get in this till it breaks that. Okay. That's going to be something you'd want to see. Now, again, I say that some people will get in, go ahead and get in now, stop there tight. You might get whipped out. It's totally up to you. It may bounce around in here for a while. More than likely what they do is they bounce around for a while and then it breaks to one side or the other. Depends on which side of the market, wins out. So get in, be safe. And if it breaks through this high up here, then look to go long. All right. Hope you enjoyed and trade safe. We'll talk to you later.